Good morning, it's Harvey Jackson. Just going to go through some of the news items here. Biofuels increase in demand in Asian markets. The first article, and I've been talking about this whole oil energy security, and the Asia countries are seeking to use more biofuels since the onset of the war. Biofuels can help ease fuel prices, as some of these countries are paying exorbitant prices for diesel fuel, and we think we are here, but they can manufacture biofuels and add it to the blend for cheaper than they're actually paying for the diesel fuel, especially if they're not refining it themselves. Just some of the other states here, crude oil up 30% since war started. Key biofuel input, corn up 5%. I don't see that, but countries in Asia heavily depend on Middle East oil imports have sought to increase biofuel since the beginning of the war. Asia buys about 80% of its oil shipped through the strait, which has largely been closed. Vietnam said it in late March they would switch fully to ethanol blended gasoline from April due to the energy price surge, bringing forward a previous target June 1st. Ethanol is produced mostly from corn and sugarcane. In Asia, countries do look at biofuels and can produce locally sourced feedstocks as they reach two goals at once: limit energy imports and increase profitability for farmers. So that's highlighted in the green area here. And then there's the food versus fuel. And then here we are, Europeans uh, have pushed the narrative to the opposite side now, using the food versus fuel. They actually, in Europe, they have a biofuel consumption um, uh, cap, and it's about the food prices and deforestation rates, whatever. They took away all their trees 300-400 years ago, and they're trying to control the rest of the world with their deforestation program in Canada as well. Um, so this is just the graphic that's just talking about energy and the increase of using biofuel. It doesn't look like it's increasing a whole big pile, but it's definitely increasing, and energy is just on the increase all by itself. Article or posted from Australia, and what's maybe to highlight here is the increase in canola, up 12%. Um, and just talking about what they're going to increase in acres there as well. And so barley and canola is on a big increase. Uh, U.S. positive on Iran deal makes talks still uncertain as the end of the war truce. Iran says U.S. will bear responsibility for the escalation to intercept ships, um, and talks on track for Wednesday, even though there's nothing nailed down there. Oil prices fall, which is a good thing for sure. And Iranian delegation to advance ahead in Pakistan. And you can see here the boats basically come to the strait, and a few go through, but it's not as big as you would like. Just the oil prices staying lower. Quick look at the weather here. You can see that there's a build of snow. There's a snowstorm that's happening based on Friday here, northern Saskatchewan, and kind of starts to cover more and more as we get into the end of next week. You can see that there's looks like a fair bit of snow, especially when you get into the pink areas here. You got 15 to 18 inches of snow if that's were to happen. Frost over here. There's Drew Lerner did talk about frost in Kansas over the weekend. We'll have to see what kind of damage. It definitely didn't make the news. It did help wheat markets though. And then late April, it looks like we're going to get another cold area and some more frost getting pushed down into those potential areas. So this is just your National Weather Service talking about that frost in the east. Thought I would switch gears here, talk about the Canadian soil moisture before we actually get really rolling here. You can see that uh, parts of the Peace and Alberta have the biggest portions of soil moisture deficit. And here's just a total soil moisture, and you would say that there's an even bigger area that needs moisture for sure. So just a quick look at the markets. Canola is up $2.90, July at 7.30. November is up $1.80 at 7.25. Soybean oil is just peeking its head above the 70 cents. We'll see if it can continue that momentum. Palm oil is up as well. Crude oil down $1 at 86.39. Brent is down $1 as well at 94.38. Diesel fuel futures are just up fractionally, just a couple pennies at 3.45 a U.S. gallon. Soybeans up 5 3/4 cents at 11.87. Spring wheat is up a penny at 6.73. That's July, and new crop is up a penny, or up above the 701 mark, and I think we're in a holding pattern there. Unless you get the price that you want off the combine kind of scenario, we might be just waiting for to see how this market develops on wheat. Corn flat, and the Canadian dollar flat as well. Feeder cattle are down. So just a little closer look, and you can actually see that we are, if we're just following slow stochastics as a buy signal and some of the moving averages, we are above that moving averages, but I'm just not sure how much momentum we have. If we're just going to get to the top here, is it even worthwhile getting in there? It could be, considering it's $20 possibly that you could actually try to capture there as well. Same thing. You can see that even on the November contract, you are crossing over. That would be a buy signal as well, and but you still look like you're caught in this range as well. So if you're doing that trade, just do it with caution. European rapeseed, basically caught in the sideways trade, but at the upper end. This is the chart that's actually going to push us. If we can get above this line and start trading, it's bullish. But when you look at, you put the auto chart signals on, it's actually a bearish, a triple top. The way that this signal auto chart pattern thing is drawing. And then when you look at soybean futures, it's actually drawing an upside target because it's starting to build a right and left shoulder, head and shoulders, reverse head and shoulders, to give you an upside target, only to get us to the highs that we made at the beginning of March. Crude palm oil, nice green candle. Light crude oil futures. This is where these auto charts. I would say it's improbable. It's going to go lower than where the market was trading before. I doubt that. We've got lots of problems to fix. Your diesel fuel futures, if we can get down anywhere close to that $3 US gallon, it should be a buy. And I heard some quotes yesterday, in that $30 semi-load kind of lot, in this area, a gallon or a liter, sorry, and then your GST still on top of there. Your gasoline futures has not moved down like the diesel fuel futures. So the biggest push is in there. Canadian dollar, I'd like to see this stop going up, honestly. But I guess the new world order is we have to have a strong dollar so that we basically paralyze ourselves to do some trade with other countries. Brain dead, Carney. Anyway, U.S. dollar futures kind of starting to hold here, index. And you look at the S&P, it's unfazed by the war. And wheat, hopefully we can get the same signals as the S&P, but we're trying to peak above that value there. And when you look at the May futures, we still have to get above that 662 mark before we can actually say that we're going to get bullish there. Your December futures trading right at the previous highs there, but need to keep going. When you look at Kansas, your overhead high is about $1 higher than where we are right now, and it's trying to peak out here with the weather stories that we've been getting. Your Chicago wheat futures is over $1 higher to get that previous high that we had there. Here's your wheat futures up against some of the short-term moving averages. It's above your 10-day, now trading right at the 20-day. Your proteins are down. Live cattle pulled back pretty substantially with the rumors that Mexico might be shipping some cattle in the near future. So both of those are lower. And pork is having issues too with China telling their farms to start culling their herds. That's all I have for you.